meantime, commodities like oil and copper were down today after disappointing China manufacturing numbers. Investors are fearful that the world's second largest economy is headed for a crash, but our next guest says the slowdown is just the opportunity he has been looking for. Let's welcome legendary investor and author of the book, A Gift to My Children, Jim Rogers. Jim, it's great to speak to you again.
Good morning, Melissa. How are you? Or good evening, I guess it is there.
Good morning to you, Jim. In terms of the pullback that we've seen most recently on these China concerns, and they started before the HSBC PMI numbers were out today. They started actually this week with the comments from that BHP executive about slowing iron ore demand. Where did you look to first to take advantage of this pullback?
Oh, Melissa, China's been trying to slow its economy down for 3 years. They've been trying to pop a real estate bubble for 3 years, so it's finally bearing fruit, and I'm delighted to see it. They need to do that. It'll be good for China. It'll be good for the world, and it will present opportunities for all of us. I hope that the Chinese market collapses so I can buy Chinese shares.
So at this point, you're not using this minor pullback because you're anticipating a bigger one, which will be a bigger buying opportunity in your view?
I certainly expect the world to have more of a slowdown in the next year or two, and that will be an opportunity for all of us.
Jim, if you look forward and you see a potential sovereign debt crisis in Japan, so think about Japanese yen down 10%, U.S. dollar up 10% from here, how do you think about risk managing your long commodities exposure in that environment?
Well, I usually try to have some shorts of something. I'm long commodities. If the world economy gets better, commodities are going to do better because of shortages. If the world economy doesn't get better, they're going to print money. It's the wrong thing to do, but when they print money, you should own real assets. So what I will do is I will have shorts, probably in the stock market, to protect myself. I'm nearly always hedged one way or the other. For instance, right now I'm short emerging market stocks as a potential hedge.
Hey, Jim, thanks for waking up so early. So if the collapse in the Chinese shares come to fruition, my belief is that this whole run-up we've seen in U.S. shares is predicated on continued China growth. What does that mean for the U.S. stock market?
Well, I'm very pessimistic about the U.S. stock market, certainly by the end of this year and into 2013 and 2014. That doesn't mean we won't continue to rally this year. There's an election this year. Mr. Obama wants to get reelected. He's doing everything he can to get reelected. He's spending money, he's printing money, he's putting out good news, artificial or not. But later this year, it's all going to catch up with us. I happen to agree with you 100%. I'm really worried about 2013 and 2014.
All right, Jim, stay right there. We're going to continue our conversation with legendary investor Jim Rogers on the other side of the break, including a shocking emerging market play. Stay tuned. Let's go back to Jim Rogers, chairman of Rogers Holdings, who is coming to us this morning for him, from Singapore. Jim, I want to go straight into what you think is one of Asia's best kept secrets, and that's Myanmar. And a lot of people will say, how the heck do you invest in Myanmar? How are you doing it?
Well, Melissa, Myanmar is an astonishing opportunity. 50 years ago, it was the richest country in Asia. Now it's the poorest because they closed off. But they're just now opening up, just as China did 33, 34 years ago. I find it wildly exciting. The problem, Melissa, is that for Americans, it's illegal to invest there. We live in the land of the free, Melissa, so we can't invest where we want to. The rest of the world is pouring in there, so there's nothing I can do right now except wait and watch and hope that the day that they say you can invest, that I can jump in.
So that is the play that's on your radar right now that you can't partake in. But let's go back to some of the plays that actually some of our viewers might actually be able to partake in. You want to short long-term U.S. government bonds. That's where you are right now?
Yeah, I shorted some just yesterday. But, Melissa, I hasten to tell you that my timing has not been very good in the bond market in the last 2 or 3 years. So if I'm doing it, it's probably the wrong timing.
And you've been long gold and silver for quite some time here, and you're advising people to wait for a pullback. What sort of pullback would attract you to get to add to your position?
Well, if gold and silver go down, again, I'm a bad market timer, if they go down, I will start buying more. If it goes under 1,600, I'll buy a little. If it goes 1,500, I'll go a little more. Who knows how low it could go. Gold has had big corrections during bull markets in the past. If it got down to 1,200 or 1,300, I hope I'm smart enough to buy a lot more. That's not a prediction, Melissa. I'm just saying if it happened, I hope I can jump in and buy a lot more because gold is going to go much higher and silver over the next decade.
All right, Jim, a pleasure to speak with you. Thanks so much for your time. Hope you'll come back on the show sometime soon. Jim Rogers joining us from Singapore. Got your first move tomorrow. We come right back. Stay tuned.